Testing 1 2 3. Testing 1 2 3. Joel, you want to go?
Testing 1 2 3 1 2 3 4.
Testing 1 2 3. Testing 1 2 3. Let's see how we did.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I've been a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Thursday edition of Benzinga's Pre-Market Prep. I'm Spencer Israel here with Joel Elconin and Dennis Dick. We've got like 1,000 earnings reporting today. What's the number, Joel? It's like 289 earnings today. So we won't cover all of them, but we'll get to as many as we can. Our guest today at 8:35 will be Harlan Payne of Amazing Power Patterns. Joel, how are we doing in the S&Ps? The Dow's doing amazing. What are we doing in the SPOOs?
S&Ps are down $1.25, 24.72 1/4. I'm going to talk about the SPOOs when Dennis comes on because I have a real interesting statistic for him. Crude, you thought it was dead. It went down to 48 and change. Now we're right back up at $50 again, challenging that level. I will have traders keep an eye on 50.41 to 50.43. That's a double top from Monday and Tuesday sessions. Gold in the red here, just a bit by $4, and silver following suit, down 20 cents at 16.53. Good morning, Dennis. Well, I know how you're doing on this Thursday morning. But,
no, it's not a good morning here. Anyway, so 289 stocks reporting earnings today. And of course, holding overnight, I missed one. Well, I missed one. I might have missed more than one. But anyways, I had a position. I had GLD and I had GOLD short. Did not realize that they reported earnings. It just slips. When I had 289 companies I'm looking at, I'm looking too fast. And I missed it when I was writing it down. I obviously didn't write it down on my sheet. And GOLD, obviously, and that always works against you too. So I'm short it as a hedge against GLD because the gold futures fell last night. I was shorting some of the gold stocks against it. And obviously gold reports here this morning, GOLD, and blows it away and it's trading up 3% on me. So that's a little bit of, it's bad luck because it's really 50-50 when you randomly hold it into an earnings report, but it's, obviously lack of, research or a missed earnings report for me, but I'll use the excuse 289 stocks. You're going to miss one now and then.
Dennis, and you said you're more toast than usual on this one because it's an ADR. Do you just want to explain the dynamic?
Yeah, and I hate the ADRs. I need to stop trading ADRs. I always have bad luck with them. I mean, it's because it's already priced in. I mean, this is not in price discovery mode anymore. You can look at GOLD and say, oh, well, it's only traded 19,000 shares. Yeah, over here. But overseas, it's traded a crazy amount. You can see how active it is, trading the bid and the offer. High frequency market makers just obviously surrounding where the current price is overseas. So this has already been trading in the 95 handle very actively overseas. The equivalent over there. So it's priced in. So can it move? After 9:30? Not as likely as a stock that was a U.S. stock that hasn't had the real liquidity come in. This has already had the real liquidity come in. So you wake up and you're like, oh, I missed that earnings. And you see that they beat, and you see the stock up, and it's kind of like gut rot a little bit there when you have a big loser on your hands. But it happens. I mean, it's going to happen. Sometimes it works in your favor. Sometimes it doesn't when you make a mistake and you don't realize I had an earnings report. But it happens.
All right. Before we get into the Tesla earnings, I mentioned I wanted to talk to the S&Ps with the S&Ps you briefly. Do you know how I've been doing the levels and looking at these, the overnight, the trading, the highs and lows for a long time? Well, I think I have a technical formation now that I've never seen in the S&Ps, and it's
what do you got for me?
11 closes between 24.68 and 24.74. 11 closes within a 6-point range, and you can see here on the daily that's consolidation. I'm thinking just going crazy with a strangle here because we're not going to be at 24.70 next week. We're just going to continue busting.
Well, what's the catalyst to take us out of here? Because we know, let's look here, and this is something I've said for a long time, and people are going to hate, some are not going to like what I'm going to say here, but a lot of this has to do with pure high frequency trading, and 99% of the time it's so competitive, their markets are so competitive that it actually dampens volatility. And I think the VIX is at 10 because high frequency traders are just so aggressive. So what happens is they're so aggressive in the market making, then you can see it even, on a stock like overseas, like I was just looking at with GOLD, and it's so competitive that it just tightens everything right up. And not only that, when the volatility, gets tighter and tighter and tighter, they get more aggressive, more aggressive, more aggressive. What happens though, that other 1% of the time is the mess. So this is where, I have the issue with only having high frequency trading market making, because when all of a sudden you have risk coming into the picture, they all back off. And now we're stuck with no liquidity at all in certain times, and you end up with flash crashes, with all kinds of fun stuff there. So 99% of the time it dampens volatility. The other 1%, it exasperates it to a ridiculous level. So I've always been a fan, we're all floor traders back then. I liked it. I think the market structure was actually better back then. But maybe, for, looking at it, if you want less volatility, 99% of the time, you don't mind these odd flash crashes or these odd, craziness there, it helps. But I think the VIX is low for a while, and I think it's low because of market structural reasons as well. Not only, and that's, a lot of people shrugging stuff off, and, when risk is down, people get less scared, and it keeps coming in. So there's a multitude of factors, but high frequency trading is one of them.
All right. Well, 11 closes in this narrow area, several highs up at 24.75 and 77, your all-time high 24.80, 50. I'm trying to think of a wager on this one, but I'm looking for a breakout from this area. I'm not, willing to, I don't think 24, like we're at 24.72.50. I mean, 24.52.50 versus 24.92.50. It's good. It just can't stay. I don't care about high frequency traders.
You can't stay here forever.
It's not going to do 12.
It can stay here longer than you think was my
point. It already did.
Point. It can stay here longer than you think.
All right. So we got to go to individual issues for volatility. And Tesla, we had a great day in the office yesterday with Gene Munster talking Tesla. He almost convinced me that like in 50 years, there's going to be driverless cars, but great chat with him, long-term bullish stock, but let's go short-term and how they do in their last earnings report.
All right, Q2 adjusted EPS for Tesla, $1.33 loss versus $1.80 loss estimate. So the loss was not as bad as they expected. I love that headline. Sales $2.79 billion versus $2.55 billion estimate. So great sales numbers and a good EPS number. Q2 deliveries up 53% year over year. And that is the story for Tesla for the Q2.
It's a huge pop here. And, the company obviously still losing money, but it doesn't matter. They beat on their number. People love this stock. They want an excuse to get back in, and they got it. It's a great earnings report here. Up 6%. It is off the highs and is leaking a little bit. So that is a little bit of a concern. What was that after hours high there, Joel?
356.04.
So you're 10 points off the high. That's somewhat concerning here, but I think there's just underneath demand, just as much as we always say overhead supply and different things. Tesla just has underneath demand. People just love these cars. They like, and they don't look at valuation as a metric. And if you're not looking at valuation, you're looking at it as pure growth. The growth is there. So again, it's not my cup of tea because I'm a value guy, but your growth managers, if you got a growth portfolio, you're probably going to have this in there.
All right. Let's see. You got the pre-market high and pre-market low, really didn't dip down as much here. We are trading at 346.36. I'm just going to look at these old tops here. And you had 3 or 4 here, and I'm going to give you a range because this is a higher price stock. Let's call 340. Oh, man, right where it's trading is the middle of those 3 tops that you had from the end of July. So you hold in right where you are right now. I think you go up and challenge that pre-market high. If not, I'm looking for a leak and back and fill in here. The other thing, if you were just looking at this technically and you weren't, trying to forecast, you had a shot at that 325 area because you had the break, you had the rally, you had the 50% retracement, and it actually ended up closing right in that area. So the quants were undecided going into the report here. So if it gets back, I'm almost tempted to stick a few shares of this in my portfolio and just, not a big part, but just to participate. Gene was very convincing yesterday. And
yeah, he thinks it could be one of the most valuable companies in the world eventually.
That's a sharp turnaround there, Joel. That's a
I
sharp
mean,
turnaround.
making money.
That's true, because you can listen to me for 2 years and saying valuation. You don't look at valuation, it's a different story. But when I turn around by Tesla, it's the top.
Yeah, we could have said that at all these different levels. But if you just think about how far, and we don't know exactly how far behind the big three are, coming up with autonomous vehicles here. I mean, there's going to be a lot more Teslas on the road. I think that's a foregone conclusion. Are they going to be driving by themselves? And, is that going to be a predominant thing? But I mean, there's going to be more.
Maybe they'll have the flying car.
Actually, Mike Marshall, he came up with a question, and I didn't ask Gene this, and I should have. And I thought about this a long time. Why mess around with cars, like on the ground? I mean, when are we going to all have our little space capsules, and be off the ground?
Well, I know. It's so disappointing, actually, because when, just go to the Back to the Future movies, Spencer, you know what I'm talking about. And Back to the Future, when I think it was made, like 1985, when they go 30 years into the future, it was 2015. They had flying cars.
Yeah.
We're 2017. We don't have any flying cars. They have hoverboards. They had all kinds of cool stuff. What happened? We were supposed to be there by now. Back to the Future had thought of it all.
And what about?
So, I'm disappointed we don't have flying cars either. I want to see flying cars in my lifetime. I probably only got 40 years left. So if I've got 40 years left, so we need to hurry this up. Musk, I want to fly in a car. When he creates a flying car, I'm getting along Tesla.
What about the Jetsons?
Yeah, exactly. Everybody thought of these flying cars years ago. Why haven't they created it yet?
All right,
we need you.
I'm shorting Tesla now until they come out with a flying car.
I want to know.
Apple's going to come out with a flying car, maybe.
I want to know where our jetpacks are, because I thought jetpacks were also the future in Thunderball, right? James Bond has the jetpack. Where's my jetpack? Where's my jetpack?
I tell you though, whoever creates teleportation is going to put all these companies out of business.
Short everything.
Yeah, if they create teleportation where they break you down your molecules and send you over a line and show up in a different spot, the cars are done. Now we're thinking deep. Cars are off. You can short for in GM when they create teleportation. That's over. Anyways, teleportation is not going to happen in my lifetime, so I don't have to worry about that. Let's go back to the earnings parade here. Fuzzy wants to know about Teva, T-E-V-A. I'll tell you, it is an absolute disaster here today. It's coming into, it was coming into an area of major support, but just cut like that, like a hot knife through butter. The reason, and I had looked at this back in May and June when it came down to 28, and I was like, this could be one, for my invest portfolio, 5%. And then I looked and I had $36 billion in debt, and I kind of threw up in my mouth a little bit, and I did not put it in my portfolio. Debt problems here is, it's kind of like the same story as Valiant, debt problems. And there's just too much debt for me to get in here. I mean, can it turn it around? Sure, they can, but I think the debt is an issue. What do they say in the report here, though? Because they must have said something really bad.
Well, yeah, it's all about the guidance. So the Q2 quarter, they missed on the EPS by 4 cents, and they missed by sales by just a hair. But they're cutting their outlook for the fiscal year. EPS was cut by 60 cents on the low end of the range, and the sales was also cut by about $1 billion on the low end.
It's a mess. It's a mess of a chart. Joel, can you find a support somewhere? I mean, the value traders look at this and say, but as long as they don't look at a balance sheet. Joel?
I'm here.
You're trying to find support. You can't find any.
No, but I did find our first passenger drone. Can I put that up there on the screen? Will that show up real quick if I slide it over? Yeah.
What are you talking about, passenger drone?
Can you see this?
I'm looking at the screen. We're on delay.
Mike Marshall just sent this to me. This is what I'm looking for right here.
Yeah, who's creating something like this? Let's do it.
Yeah, that's what we need. That
looks, they could make it a little bit nicer looking, and color it up a bit.
Driverless, if they can make it driverless.
Right, Dennis. Beggars can't be choosers.
All right. Teva. You want to find support in Teva? There isn't any. There isn't.
There is none. Is this like an all-time low?
It's wherever you put your bid, Dennis. That's support in Teva. We are crashing here, 26.17, making new lows as we print. Let's see here. I'm going to find something above 20 here. 26.78. You're going back to January of 2005, and we have taken that level out here. I don't know, 22.82. That was the low in November. But for this, I would just, let's say I had a nice short position, which I don't. I'd just be using the half and whole numbers and find out when people will finally stop hitting my bids. This would be something where you'd look for that pre-market low and see, if that holds up as the low of the day. But absolutely no support here in Teva. Did you already mention the $33 billion in debt?
Yeah, 33 or 36 billion. They're trying to get that down. They say on the call they're going to get it down by 5 billion. I mean, that's the problem here. And you wonder, when you look at this and, and things got a 5% dividend, is the dividend safe? And I'm just looking, in the chat they're talking, but did they cut the dividend, Fuzzy? I don't see. I'm just looking through all the headlines. I don't see it. They cut the dividend here this morning, but you wonder when the stock's in a free fall like this and that much debt, if that isn't in the cards. So I'm out. I'm not going to get on this one. I mean, it looks cheap, but I think it's a value trap just because of that debt. Yeah. The debt's too scary for me. And when I'm analyzing and, and obviously I wear a couple of different caps. I always say with my trading and investing, I wear 3 different caps. I'm a long-term investor where I sit down, I look at the balance sheets and the cash flow. I take my CFA analysis and I analyze it. That's the stuff that goes into my investment portfolios. Those decisions take time. I have my day trading that my decision-making takes typically 1 to 2 seconds. And then I have my swing trading where the time horizon is, a couple of weeks, a few weeks. So 3 different caps I'm always wearing, and all depending. Teva was something I was looking at as potential investment. But what scared me away was when I got that balance sheet and I saw the $36 billion in debt. And I'm like, holy cow, I remember Valiant. That's what brought them down. I mean, it's a lot of debt. And that's what the problem is here, I believe, with TEVA.
I want to point out real quick, Charlie Grant is a reporter for the Journal. Great Twitter follow if you don't follow him on Twitter. Charlie Grant, he tweeted a good catch here from Evercore ISI. They're looking at Teva's income statement. They've got the same line on there twice with 2 different numbers. What's going on over here? They've got two.
They got problems.
They've got 2 different selling and marketing expenses lines with 2 different numbers for the same quarter. So
I don't see any headlines on this, but Jag Trader in the chat is saying if you look, they're announced a second quarter dividend of 8.5 cents, and that's down from 34 cents. So Jag is saying they have cut the dividend here this morning, which could be the case. This could be why it's getting killed here. Still no confirmation on that, but that's what one of our traders is saying this morning, that the dividend has been cut indeed. So I don't see it on the headlines. Do you see it?
No,
anywhere on the headlines that we can get confirmation on that? But it looks like there might be a dividend cut here.
I was going to say I've seen that on Twitter too, but I'm still looking to actually confirm that. But
okay, we don't have confirmation on that, but that is what we're looking at here. It looks like I don't see it on a headline yet, but again, it does look like, and I'm seeing it multiple places now. Jag Trader, thanks for bringing that to attention.
Now I can confirm that.
So
it is confirmed.
Yes.
It is declared a quarterly dividend of 8.5 cents. And that is a cut of 75%. So they've cut the dividend.
So they're borrowing money to pay out a dividend? That sounds like a really good business.
Well, they've already borrowed the money, but they borrowed too much. Now they're cutting the dividend because they're paying out too much. There's problems here with Teva.
Okay, so 25.85.
I've got to wait till it stops falling before I even get close to interested. And I need to see the debt last. I mean, Valiant started to figure it out. They've been selling good drugs to pay off debt, but that's what they need to do is get out from under that debt load. And, that's why the stock has come back. And Teva's going to probably have to do the same thing. Figure out how the hell to get out from under all this debt that they've accumulated.
All right. You could see value.
Doc J asked, I have separate accounts. Absolutely separate accounts. So for all those, I've got my long-term investment account is at a retail brokerage. And then I've got my prop trading account, which is obviously Bright Trading. So different accounts.
All right. So we covered a couple stocks here. Let's move on. We have a few more.
Yeah, no, we haven't covered a lot. It's interesting conversation. So we're having fun. Okay, let's dive into. So we have 289 stocks. So chat, if you have a specific stock, let us know here because we're just going to start reaming off the big ones. Let's go to Yum Brands, YUM. Stock was trading up ahead of the earnings last night. Had been running into it. I wanted to short it ahead of the earnings because it was trading up 2 points last night. I'm like, it's already run up. I think they need to blow it away to go higher. And I didn't. And, it's just one of those days. It seems like the stuff I didn't work out. It's one of those bad days for me. But anyways, Yum Brands, give us the results, Spencer.
Can you pull the number real quick?
YUM.
Yeah, YUM. Can you pull it up?
I can pull it up.
All right, you can pull it up because I can't pull it up right now. So
okay.
you
got it?
My
Do you have it?
my pro is refreshing.
I am Yum brand.
1.45 billion versus 1.42 billion in revenue and 68 cents versus 61 cents. The comps were light though. Comps were 2% against estimates of 2.2. So the comps were light. So that's maybe, but again, the media will say, oh, it's the comps that hit it. But I'll say the stock has run up 10, 12 points in the last 3 months into the report. They needed to blow it away. That's not a blow away, and that's why the stock's trading down.
Boy, they got that 7. I see 78 on one platform. I see 78.5. So you're telling me
68 adjusted.
They did that. They did that before the print, huh? Before the that's right.
The trades. Yeah, 78.5 was trading last night.
It was
bid 78, and I went out 79. I was like, I think I can get this at 79 because I was aggressive. And went 78.5, and I didn't quite get it. And then 78 went, 77.5 went. And I was like, I should have hit the 78. Obviously, should have hit the 78. We have 3 points right now.
Pre-market low 74.80. This could be a tricky one right off the. Well, you also had a little spike to 74.50. Currently trading at 74.90. I mean, pick your poison here. I'd say it's going to trade 74.37 today. 74, 3 lows right around the 74.30 area. I would look at that as a potential area of support. Beneath that 73.79. If you go in the rally mode, I'm sure people would love to be out at yesterday's low of 75.39, and that was also a double bottom from Tuesday and Wednesday. So support and resistance, even though we've had a big drop here in Yum Brands.
AIG reported earnings last night, and this stock always seems to pop big time and then give some of it back or all of it back. It didn't give all of it back, but it gave some of it back. Spencer, AIG numbers.
$1.53 versus $1.20. That's what I've got.
Blew it away. And it had been going up, so it needed to blow it away. But it hadn't really gone up that much. But AIG is just a funny animal. It gets the pops, and then it seems to typically give it back. You can look back in May. Same story. They blew it away. Was it May or I'm trying to look at the chart.
It was. Yep.
Was it? Yeah. So in early May, they had the gap up and on the good earnings report. And then within 3 days, it gave it all back. So I'm not chasing AIG just because the traders seem to never give it the love that I think it deserves. I own AIG in my investment portfolio, but I'm not going to be chasing it up here as a trade because it seems to always give it back. I mean, Mondelez is the same story yesterday. We've been making some good calls on the show because I remember I was saying yesterday with Mondelez trading up at 45 bid. I was like, I think there's overhead supply. I think there's sellers that come in. Different story there. And Mondelez actually ended up giving it all back. Now, this is a different story. It's a great report. AIG has been a good financial. I don't think it's going to be one that's going to turn around and fall 2-3 points on this today. But I don't know. It's up to $1 here, and it's done it before. I think it should be up, but it's just from the action before. I think it gives some of it back. Talking against my book again. Who does that?
You do. 67.
I'm the only person on the whole street that talks against their book.
I got a great number for you here, folks. You had a high at 67.47. That was the yearly high. You kissed it again later in the month in January. You kissed it in the pre-market. Let's just call it 67.50. That's 50 cents away from there. So I look at that as resistance. The longer it takes to get up to 67.50, I look for it to back and fill. But that's a nice level. And if you've been hanging on here since since January, waiting for this thing to get back in the 67 handle, see if it can hold these gains.
One of my Twitter followers, Tom McElroy, is asking, at this point, is Triple D, DDD, not me, but the stock, totally broken or something to look at? I own Triple D in my swing trading portfolio / long-term investment portfolio. I sold half at 22, like I was saying yesterday. I wish I would have sold it all because it's almost given back all those gains that I was up on it. And it's back here 15.25. Give us the numbers here for Triple D, and then we'll do some analysis.
Yeah, Triple D. First of all, I thought that was funny how you said your swing trading and your investing portfolio are the same thing. But Q2.
Well, it's not supposed to be, but that one was one I couldn't decide if I wanted. So here, this is funny with these ones.
I know, I got that too.
I liked the balance sheet. I liked the numbers. I actually liked it from a fundamental standpoint. I liked the setup of it. So I stuck a little extra in there, and I was like, I want to hold on to some of these long term, but I stuck more than I normally would. So I basically sold out of the swing trading stuff at like 22, and I was like, well, I wanted to stick with some of it because I like the company still. It wasn't just for a swing trade. It wasn't just a technical setup. Typically, my swing trades are just technical setups. I don't really care that much about fundamentals. My investments are fundamentals. Well, I like both on this, so I put a little extra. And it was good. I put extra because it went straight up, went up 50% in a month. I should have sold it all. When you get 50% in a month, what do you say, Joel? Never look a gift horse in the mouth or something. What's your saying?
Yeah, that's one of them. Or you don't go.
Yeah.
Or you don't.
So I
you,
obviously should have sold it all. 50% a month, book it. But I didn't book it. And I'm talking about back in May. And, obviously it's come back down. So I sold half, which was good. Should have sold it all.
Or you don't go broke taking profits?
All that.
Okay.
All of the above.
1475. That's your pre-market low, hanging out at 15.25. I think you might see some interest in this thing at that area. You had a 1481 low. That was back in May of this year. So big. I mean, just like if you've been short this thing and it just, all this way, you finally got it peaked when it got over 23. I don't know. I think I'd be finding buyers here under 15, maybe not necessarily, not necessarily, true longs coming out, but holy macro, this thing was at $18 a week ago. That's a pretty nice windfall here on profit. So I'm looking for buyers under 15, preferably if you're short.
I think there's something underneath demand here too. So I'm not coming here selling my triple D position here this morning. I'm going to stick with it. I still like the company when I looked at it. I don't think they have any debt actually. I'd have to go look at that again because I forget. When you own 85 companies, forget it, the individuals. But I think I originally looked at it. I was surprised they didn't have any debt at all. But anyways, I'll have to go and just verify that, or if somebody else can verify that for me, let me know. I'm sticking with it though.
I should add that Triple D revised their guidance downward for the fiscal year.
That's why
their EPS, they revised it by 5 cents downward.
Molina Healthcare, MOH, disaster, Fuzzy. It's a disaster here this morning. Stock trading down 10% in the pre-market. Was worse last night. It's actually not that bad this morning because it was trading actually in the 58 handle last night. We're 60 bid here, so it's come back a little bit here this morning, but it's still a disaster. MOH, Spencer, you got the numbers.
Well, yeah, the MOH EPS number is not comparable to the estimate. The estimate was 86 cents. The actual was a $4.10 loss. And so that's not comparable. Sales of $4.999 billion versus a $4.87 billion estimate. They're also withdrawing their previously issued guidance due in part to their Q2 results. So
sounds bad.
They're just saying, never mind about that guidance. Never mind.
Okay, so that's getting the beats. You've got Aetna, somewhat related, but no, they're a little bit different business model. Aetna's going the other way, and AET is trading up 6 points this morning because they reported good results. Spencer, what did Aetna do?
$3.42 versus $2.35. Sales of $15.52 billion versus $15.39 billion. Their Q2 guidance coming in higher than the estimate as well by about 50 cents. And
not surprising here, this is an all-time high, I believe, for Aetna, but Humana blew it away yesterday. So it's not surprising. Aetna, they were once upon a time going to merge together here. These are very related companies here. So if you were taking the information and looking at Humana saying, well, if Humana blows it away, Aetna's bound to blow it away, you're making 7 points here this morning. So nice trade for the Paris traders there if they were trading Aetna off of the Humana numbers just from the previous day.
Just an interesting tidbit on this Molina Healthcare. And you see this run up here, Dennis, on May 2nd. That's when they fired its CEO and CFO, sons of the company's founders. And it made that move on that day. All right.
That was it? That was all it was firing some people?
Yeah, the CEO, yeah. And usually when those things happen, I always say, oh, it's an overreaction or whatever. Are they going to be that good? Are they really going to change the company that much? But that rally continued up to this thing hit 72.79. And then, as you would say, Dennis Kaplui, way back here, 58. That's your pre-market low. I mean, I don't like this. I mean,
a lot of air.
I don't like this. I don't like this at all. I mean, look at this area. Do you expect to see a lot of bids in this area? I mean,
there's just nothing in there.
Yeah. $51.
You get some bids because people just say, oh, stock's down 10%, I'm going to buy it. But sometimes those people get run over too. I mean, I don't like just stepping out when I have nothing at all to lean on. Right. There's nothing that 50 handle.
Yeah.
So it's tough to come in here. Can it bounce? Sure it can. It's just in the middle of nowhere is what we're saying. So I'm not saying come in here and short it down. I hate shorting stocks down 10% too because you're short in the hole. But I don't know. It's hard to come in here and buy when there's not even a level. I mean, Triple D, completely different story. Here's a stock that's down almost 10% or actually more than 10%. Same thing. Different story, though. It's coming into support. MOH is coming into nothing.
Right? Yeah, just
Completely, it's funny. 2 stocks down 10%. Completely different stories, though.
what do you think overall? You think you've made more money buying stocks up 10% or shorting stocks down 10%?
I don't chase, so I probably made no money doing any of that.
And just looking at this,
It depends if you're in a
Triple
bull
D.
market or a bear market.
Triple D, the other thing about this $15 level is that after it had a little breakdown in March, that was resistance too. And then when it finally broke above it is when you had the nice rally. One little blip down under 15 again. I think that was on an earnings report. So not only is it old resistance, it's new support as well.
Another stock that reported here this morning was Allergan, AGN. Had this one in my investment portfolio for a while, took it out, shouldn't have taken it out because the stock is much higher than when I sold it down at 235 or whatever. Stock getting hit a little bit here this morning, though. Give us the numbers here, AGN.
They had a good number, $4.02. That's a 10-cent beat on the EPS. Sales of $4 billion versus 3.94. So a good Q2 as far as EPS and sales. They're also raising their outlook for the fiscal year, and so all good things for AGN.
245, yeah, 245 print, 249 bounce here. Let's take a look at AGN. Dennis, this is one I told you not to sell. Taking a look at it.
I should have rebought it when I went back to. Sometimes it's got to sell them and rebuy them.
245.12. That was your low on the 19th. You also had a previous day's low at 44.63. You hit that level and bounced $5. So I think the low of the day is in here. Anywhere near that 245 area looks like good support. And did you roll right into the Aetna report there on that too?
Yeah, we did talk Aetna already. So if you want to give a technical level though, let us know. This thing's an all-time high. Can you find us a level?
No.
There's no resistance.
No, not at all. Up 7.25.
It's all air everywhere.
162.45. That's your pre-market high. If I was long after this long consolidation period, up $7, up 5%, I'd be ringing this into the register. If it doesn't hold 162, you can see all the air in this good old Aetna.
Take two, TTWO. I must be the only person that lost money on this in the last month being long, but TTWO up 10 points here this morning. Wish I still had the stock that I sold down in the 60s, but anyways, or in the 69 handle or whatever it was. Anyways, stock up 12%. Spencer, details.
Yep, Q1 GAAP EPS 56 cents versus a 19-cent estimate. Sales of $348 versus $280 million. So they blew it away for their first quarter as far as the current Q2. Their EPS coming in lower than the estimate, and sales are coming in line.
90 former all-time high 82.79. So we've traded. Yeah, gone. Pre-market high 91.50. Dennis, I might go out on a limb here and say the high of the day is in here for a lunch.
I'm not doing that. No.
Okay.
And I'm a momentum trader. I like to go with the momentum. Momentum is definitely up on this thing, but it's still in price discovery mode. Only 6,400 shares. Traded some last night there too, but it's still figuring itself out. And a lot of times these things overshoot right off the hop.
Does this company do like the
video game? Isn't it? What's the big game these guys got? Me and Joel aren't gamers. Spencer, what's their big game? Is this the
Take-Two Interactive, Nick?
Why don't I ask our resident gaming
what's
War
their
of
big
Thrones
game?
or something like that?
No, it's a video game maker. What's their games?
They have Rockstar Games. They're one of the big two. It's them and ATVI, sort of the big two.
Yeah, this is one of your big video game makers. Grand Theft Auto. Thank you, Jag Trader. Okay. That's the one I was thinking of. Call of Duty too. They're all over it. We're all there, yeah.
Yeah, I'm not a gamer.
Guitar Hero? Do they have that?
Yeah, that's Rockstar. Yeah, that's Rockstar.
Is that still a thing?
We still have it, I think.
Rock Band. I have it hanging on my wall. It's been hanging on my wall for 5 years though. I bought it. We played for a little bit. My buddy got really good at drumming. I never really got good at it. So. Right, 8:35.
Yep, it's 8:35. And look at that. Time flies when you're having fun. And now it's time to take a break. And we're going to grab Harlan Pine, founder of Amazing Power Patterns. So we'll be right back, folks. Welcome back, everyone, to Benzinga's Pre-Market Prep. Spencer Israel, Joel Conan, Dennis Dick. We're on the line with Harlan Pyan. His site is amazing. Power Patterns. Harlan, how's it going today?
Hey, how are you guys? I'm doing good. How about you?
We're doing good here at Benzinga World Headquarters. Just getting through this earnings season here. Harlan, first, tell us a little bit about your site and your method of technical analysis.
Well, it's really all based on trade what you see, not think, hear, or fear, all based on technicals. Because, I cut my teeth on it, and, let's face it, we see resistance, we see support take place all the time. You don't need to be a rocket scientist or, some, big Wall Street professional to just learn how the charts work, because you know what, in a lot of cases, a company is only as good as its stock. I can show you great companies and their stocks look ugly. I can show you horrible companies, but their stocks look great. So I'd rather just go with something simple, keep it simple, stupid is my modus operandi.
Do you have like a defining bad trade, earlier in your career, or even, when you were getting going, that maybe you broke your rules or maybe stretched them a little bit? Yeah. I mean, we've all had, Dennis is having a few of those trades today, but is there any defining trade or scenario that's really, that sticks with you? Like every time you're about to do it, you're like, oh man, I remember when I did that, I got smoked. Do you have anything like that to share with us?
Nothing really comes to mind. I know we all have them. There's no doubt. Nobody has ever hit 18 holes in one, and nobody ever will. So, but there's just nothing that really sticks out to me. It must be because I'm getting old or something. I don't know. But we all remember the good ones more than we remember the ones that just, hit us in the gut. So, and I know I've had them. I just can't really recall any.
Okay.
That come
all right. So let's Dennis and I at the top.
But I can't tell you this. Now think about this though. If you're using trade size risk management of never putting no more than, let's say, 5% of your overall portfolio into any one stock, do you realize that stock can take a 10% clip at a moment in time, subject to the next moment in time? And guess what? On a 5% position that's down 10%, what's the total impact to your overall portfolio?
0.5%.
0.5%. So you see, you do that right from the start, you find yourself, you're never going to get into this, into these periods where, on its own, the stock is down pretty hard in this example. But you know what? It's not going to take your whole portfolio and send you into ICU. It's the equivalent of getting a black eye. So do it right from the start so you never put yourself in a position to get hammered. Can you imagine if you have a 20% holding of your overall portfolio in a stock, especially during earnings season, and the next thing you know, the stock cap's down 10, 20 points? That's the type of stuff that will destroy you. So don't put yourself in that position.
Great point. It's all about diversification, not only in investing, but I will say it again in my trading portfolio as well. I completely agree with you, because you got 100% of your money in one stock, gets halted intraday, opens down 50% on you, and you're in big trouble. That can happen. The black swans happen.
Oh, yeah. We see it all the time. Look at, what is it, COTV or something? Got clocked pretty good. Or better yet, KLAC.
That's just it. And people think, intraday that can't happen to them, but stocks do get halted intraday. It does happen here and then. That happens a lot, less. Like if you're just an intraday trader, day trader, typically you probably aren't going to get caught in a halt. But we see it every day. Well, it's still the odd stock.
Exactly. And you know what? That's a news-driven reaction over which you have no control over. Because really, what do we do? What is risk management? Trying to control the unknown. If you think about it, it's the fear of the unknown that gets us off. So that's why you never put. That's why I like using no more than 5% in any one issue, because you're helping alleviate some of that fear of the unknown. Especially when you look at earnings season. For every big screamer to the upside, we see stocks getting caught to the downside. And, it's these reactionary news-driven events that do it all. there's two types: those you have control over and those you don't. Those you have control over are earnings announcements. So, you can decide whether you want to or whether you don't want to. But I can also tell you that I see it all the time. You get these big pops in these stocks and these people, let's jump all over it. Sometimes it works, sometimes it don't. But look at this season. There's a lot of them in the last couple of weeks. They pop up, and then what do? Nothing.
Harlan, help me.
All you've got is big risk.
Help me interpret the 11 consecutive closes in the S&Ps between 2468 and 2474. I mean, it's a 6-point range, but you're talking about a 3,000, point index here. Amazing consolidation just for another move higher to 2,500, or is the market finally running out of steam?
Well, I don't know if it's running out of steam. It's kind of hard to say because it is summer. You do need to take that into effect. Low volume trade. It's been a great summer, though, I'll tell you that. Everything off of the 4th of July lows, that was your entry point. You pulled back, in the S&P down into that, 24 and a quarter range. Nice, orderly pullback close to day, and wham, you took off. So what are we doing now? Just look at the S&P from February. I look at the S&P from February and I go 2 steps forward, 1 back. 2 steps forward, 1 back. This thing is playing the bunny hop. So, right now, we just got done making a 2-step forward off of the July lows. And what are we doing now? We're either in the process of 1 step back, and we're going to work higher again, playing the bunny hop, or, maybe 2460, 85. This is a new sideways through time trading range. But right now, I've got nothing bad to say about it. Now, if you were to break the uptrend when you line up all your lows off of, let's say, the April lows, that's another story. Go look at MDSO and you'll see what I'm talking about. When you have an issue, if the S&P were to break, is it MDSO? Yeah, it is. MDSO is what I'm looking for.
Okay. All right. We got it out of the chat here.
Rob, I got nothing bad to say.
Emerson, EMR, Emerson Electric. We got Rob Hood wanting to get your take on that one. EMR.
There he is. I haven't heard from him in a while. There he is. I got nothing really great to say. I got nothing really bad to say. I'm pretty neutral on it. I'm just looking at a 6-month chart and look at those daily bars on this stock. I mean, every day, this thing's got a 1 to 2 point range, a lot of spikes, wide and loose, and, kind of all over the board. When I look at it, I get it. There's only a couple of point scale in it the last 3-4 months, but
yeah, it really is.
I'd rather be in. What's that?
No, I look at this and I'm going to the weeklies and I'm looking from 58 here to 62. That range has been holding since February. You're almost right in the middle. So I look for a break above 62 or a break down below 58. So what is on your buy radar today and over the next week or so? Or what kind of setups are you looking at?
Well, they're in the short term here. The NASDAQ is kind of bothersome a little bit. I don't know if we're going to go sideways through time here. But, you got smashed in that one-hit wonder day, if I'm not mistaken. Was it one-hit wonder? Yeah, about a week ago, you got that big one-day hit. And ever since then, it's just been kind of treading water here. But then when you look at a lot of individual issues, I am starting to see short-term bear channels, if you want to put it that way. That's why I brought up MDSO, because you can see, it's got hit over the head. And what's it doing? It's trying to make up its mind whether it's going to break a bear channel to the downside, or it's this consolidation that's doing here is going to break to the upside. So that's one I'm watching on. And if I line up, if this thing breaks to the downside, I might take a short sell on it. Because
75?
If you look at its uptrend.
75, is that the level you can a little bit below
yeah,
that?
That would be a sideways breakdown. Yes, that's that recent low. but you can just draw little channel lines in here on all the action down in here. And if it breaks a little, what I call a pullback off lows to the downside, yeah, I might take it. So it's just one I'm watching for right now. I'm pretty well very neutral in the market. When we did that spike up on a lot of names, anything that, spiked up and pulled off a lot of strength, I decided that, you know what, I am going to get out while the getting's good and lock some gain stocks, which is exactly what we did. So I'm sitting in a really high cash position. I got a little bit of Home Depot short. Nothing to write home about, but when you look at Home Depot, what do you notice?
Downtrend.
There's, well, yeah. And
trending
this
down.
bounce, yeah, and look at the bounce.
Yeah.
Where did it bounce up to? Draw a line.
Well, it got Amazon. It got Amazon, and now everybody forgot about Amazon. It's come all the way back to where it was before it was Amazon. So I don't mind that setup there either. I think Home Depot's been on. I think it's a great company, but again, are they? Obviously, we've said for a long time that, we thought Home Depot and Lowe's were Amazon, maybe potentially Amazon proof because of the lumber, but we didn't consider the appliances so that they do sell there. So I guess nothing is Amazon proof here. And if you think, some more, might come from that, then I guess, the Home Depot from a fundamentals perspective looks good, but you look at the technicals and I don't mind the little downtrend here from the last 3 months.
Spice wants to know
this is exactly what I was talking about. There's, a company is only as good as its stock. There's nothing wrong with the company. I'm just looking at the stock. And I'm seeing, that big slam down. When you see these reactionary downswings, that's not when you short these things. Or the flip side is when you see these big reactionary upswings, that's not the time that you want to really go buying them because you're late to the party. I mean, look at your DDD that you said you bought in May. And then what did it rocket like 50% for you? And you sold some up into 22.
I sold the swing trade stuff, but I held the invested stuff. I should have sold it all.
Yeah, coulda, shoulda, woulda, right?
Oh, yeah,
we're all doomed to make decisions.
Okay.
So
Harlan, just
so at any rate, anytime you see that.
Why Home Depot over Lowe's? Because actually, I'm just looking at the Lowe's chart here for the first time in a few days. I like this setup on the short side on LOW. I mean, you are right at an old level. We got killed on that Amazon news, went down to 71. We've come all the way back to $78 here. I mean, earnings are coming up, so maybe we're getting a pre-earnings run here. But holy cow, that 78 level looks like some massive, that was some support back in June, a little bit of resistance late June. Now we're right back up at that same level. I don't mind this 78 level and Lowe's from the short side. What are you thinking?
Well, why did I take Home Depot versus Lowe's? Because I didn't even look at Lowe's. But now that I'm looking at it, I'm going, you know what? I'm seeing the same thing. When are earnings due on these guys?
That's it. That's it. Spencer, can you grab the earnings number when Lowe's
Home Depot is on the 15th, I think, of this
They're
month.
coming up because I know at the end of earnings season, at the end of, we always have the retailers come. So Home Depot, Lowe's are coming up.
Yeah, the earnings let me pull it up real quick. Home Depot reports earnings on the 15th of August, and Lowe's is on the 16th.
Okay, so you got about 2 weeks.
Kind of a double whammy.
Yeah, the only problem is that sometimes they do run up ahead of the report. But we already ran up here. I don't know. I like the setup. I like it.
On the short side or long side?
Yeah, the short side.
Yeah, exactly. Because look at this run. Just draw a line across 78. You're back up into some June overhead supply. So
Harlan, Spice wants to know what a sideway breakdown is.
Sideways breakdown. Well, just look at it this way. We all know what a base is, right? A stock that goes sideways, between support and resistance. It's a trading range. Call it whatever you will. And we all know about breakouts. Hey, this issue's breaking out of a base. You got to buy it. Kind of like Lowe's when it broke out back in late April. That was a breakout of a base. Didn't really get too far. But so that's a breakout. Now flip that over. A breakdown is, you break support to the downside. So sideways through time. Stocks digest gains 2 ways. After they make a move, they either go sideways through time to digest and consolidate that move, or they stage a pullback off their highs, kind of like AGM did. Back in, I can't remember where it is. which, by the way, I have nothing bad to say about it.
What about NCR here? NCR Corp coming from a jar here, looking at this thing just broke down through 38 here. I think I'd be hands off until you can get back above 38. Looks like some downside to 36. NCR, what are you seeing, Harlan?
Well, look at it since May. Since May, draw a line across 38 and then draw a line across, let's say, 40 3/4. There's your sideways basing structure. So think about it. Anytime the stock now starts to get back up into that 39 zone, what are all those people who own it between 39 and 41 3/4, let's say, going to be thinking about doing? Hey, I'm break even. I'm out of here. That's what I'd be thinking.
Yeah.
So, and that's what overhead supply is.
Yep.
And that's what resistance is. So, right now, the stock's obviously in the break into the downside. How far is it going to go? I don't know, but think about it. This thing just went from 43 to in the 37 range, from what I was looking at on my chart. So, it's already, if you're thinking about shorting that breakdown here, guess what? You're a little bit late to the party.
Downward Dog wants one more, and then we're going to have to let you go, Harlan. LUV, Southwest Air. These airline stocks have gotten beat up here over the course of the last month. Everybody loved it up there in the 60s. They're all starting to hate it down here at 55.
Isn't that always the way it works?
Always.
The sun is always brightest at its peak, and I haven't said it, so I'll say it.
Say it. We set you up softball.
And you know what's coming.
Drum roll, please.
You've got to sell your peanuts while the circus is in town.
There it is.
Seriously, look at Amazon before it rolled over, so it is pretty beat up. I don't know as to whether I'd want to short it. I wouldn't want to short it here, but if the thing were to rally up into that overhead supply zone up in 59 and put a bear channel in, and it breaks that bear channel to the downside, then I think about it. So it's really knowing about what patterns, learn the patterns, the high probability patterns, and then you just go out there and you look for names that are fitting the bill.
We've been on the line with Harlan Pyan of Amazing Power Patterns, joining us here on Benzinga's Pre-Market Prep. Thanks a lot, Harlan. Pleasure as usual.
You betcha.
Is your son still doing the snowmobile racing?
Nope. He's flying around in some helicopter in some desert right now. Last I heard.
Oh man,
so
one from the other. Okay.
Yeah.
All right. We'll talk to you soon.
All right. You betcha. Take care. See you later. Bye.
All right, Dennis, let's get to some of these other 280 earnings reports that we have.
Holy cow, there's just too many to talk about. So again, if there's any specific one you want to talk about, let us know. I'm just going to start picking off the ones that I wanted to talk about. So Square, SQ, stock was popping, and I shorted it up there off that $28, and look, and stuff's falling. This is just one of those days for me, man, because I shorted Square last night after hours when it got up to 28. Of course, it goes up to like 28.30, and I'm like, maybe it is taking it out. Then it comes back in and hangs out there for a little bit. I'm like, you know what? I'm just going to scratch this out. And then it just dies. And now it's down. And I'm like, you know what? It's blew 30 cents through me. And here I am. I should have been shorting on the way. Wait for it to stop going up and wait for it to come back down through it. So when I'm covering, I should have.
Oh, that was a nice level here. Yeah.
It was a nice level. And I had it there, and it went up to over 28.30, and it just went up enough, and it was in bed there. And I'm like, I just don't know. It's got a lot of momentum here. And I scratched out a trade that I should have made money on. It's one of those days.
You want to give the report there?
Yeah, sure. 7 cents on the EPS versus a 5 cent loss estimate. Sales of 552 versus 536 $million. They're also raising their guidance for the quarter and the fiscal year. So Joel, Jack Dorsey knows what he's doing in one of his companies.
And 25.60, that's your July 28th low. Trying to hang in there, but maybe I'd be more interested in this thing in the lower 25s. I see a low at 25.16 or so, a low at 25.20. But in the event that 25 doesn't hold here, we are still 55 cents late. Look out. You could be easily seeing $24. So there's your levels, Dennis, and his thoughts on Square.
No, because I already gave my thoughts. I was big level 28. It's reversed, and I messed up. I had the call. I had the right trade. I just got shaken out. And that happens, you're going to make, and it's a lot to do with confidence too. I mean, when you're rolling, you can take some heat and you're feeling good. But when you get a bad trade, then your confidence broken a little bit. And every trader goes through. I mean, 18 years I've been trading. You still fight confidence every once in a while. When I'm rolling, you know, and I'm confident, I'm like, oh no, I'm right here. And, you know, and a lot of times, you know, it works out because usually your instincts as a trader are right. But what happens is when your confidence is shattered, you end up shaking out of stuff because you're just not feeling it. So your instincts are still correct. It's just that you're not holding the stuff as well as you should. So the confidence allows you to hold better. So, and that's going to happen. You're going to be, you know, there's up and down periods for every single trader. There's no trader out there that's going to make money every single day. There's no trader that's going to make money on every single trade. So, you know, you're going to have ups and downs here, you know, just over the long run. You know, you want to try to work it out. So, you know, right now, I was actually rolling pretty good here up till just a couple days, or just actually yesterday. And, you know, maybe the square was the start of it. Now I get the gold thing, you know, which Rocket's talking about in the chat, the gold earnings. I already talked about that briefly because I had a hedge on, didn't realize they reported, and I'm getting the beats in that this morning. But let's jump into some of these other stocks in the chat.
Dennis, I actually wanted to ask you. So when you're having a bad day, do you just like, you know, call it a day and just go away?
Never.
Never.
And people will say that, and there's books, and I mean a lot of books written about this stuff. When you lose, you know, your max loss for the day, 1,000, that's it for the day. I think that's utter nonsense because you're coming out and trading it tomorrow. So if you're feeling like, you know, really gut wrench and you're not making good decisions, it's affecting your decisions, then call it a day. I don't feel like my confidence ever impedes my instincts, though. So I still feel like I'm making good calls. I might not hold the stuff as well, but my instincts are still there. You know, after 18 years and making hundreds of thousands of trades, you know, maybe even millions of trades, there's instincts built in there. So I think those are right. So I never call it a day. I mean, I don't want a vengeance trade. And sometimes you do it and you shouldn't be doing that. So maybe I might call it, you know, a trade on that stock. Like this GOLD, for instance, you know, I'm getting the beats on this. You know, I'm down some significant money. It's 4-digit loser for me. So it's a big loser. And it was just a day trade. It was an overnight trade that I didn't realize they reported. So, you know, right away, some traders will be like, oh, well, I'm going to hold on to this, hope it comes back. I'm not that. I'm like, I screwed up. I didn't know it reported. I'm eating the loss. So, you know, I've already ate most of the loss here, and it's already priced in, and I'll be eating it this morning. Am I going to trade that thing again? Probably not. Am I going to go try to get my money back in it? Probably not. The trade was over. I screwed up by missing the earnings report, and then obviously it didn't work in my favor. I mean, so, you know, some bad luck involved too, because like I said, when you miss an earnings report, it's 50-50. It could go up or it could go down. It could be good or it could be bad, but I didn't even realize they reported. So it's my mistake. But I'm not going to come in here and say I'm going to call it a day because I'm down 4 digits here in GOLD. No, I'm going to trade my strategies as I normally do, because I don't even really consider it like anything to do with my strategy. It was just a complete mess up. I didn't realize it reported earnings. If I would have been hedged with something else, it would have worked out fine. So my strategy was good. I just missed the earnings report.
All right. Let's just take a look at RDFN here. Redfin, they must have had a report here or something, because they are trading at an all-time high. We just made a high at 33.25, trading at 32.66. This is a pretty new issue here.
This was an IPO like last week.
Yeah,
So.
they didn't have earnings. This
No.
thing's gone straight up. It's almost, what's going on, man? What do they do? I hate to ask that. Throw you guys under the bus.
I have no idea. Let's find out.
33.25.
What stock? Wait, what stock are you talking about?
RDFN. Yeah, they did report up in second quarter, outpacing the rest of the. No, that's nope.
This is a new one.
Yeah. Holy mackerel. Keep an eye on 33.25. It hit that in pre-market trading. So that's really the only level I can give you. And then before I let you go, just one thing to allude to, Dennis, you made the comment about someone asked you if you just pack it up for the day. My best day at Bright Trading was also my worst day at one point. And I was down when I was at my max, and I just said, you know what, I'm just going to try. I'm sticking with the strategy that I had, and the market helped me out that day and ended up turning potentially my worst day into the best day. So
I mean, it depends on your head. If you're like, and this is a good point, you know, like Spice is saying, everybody has bad days, they just need to shut it down. If your head's out of the game and you're letting that loss get to you and it's eating you up, take a break. You know, at least take a break, go outside. You know, my buddy Chris used to always go outside, have a cigarette. And he didn't even smoke all. He was only like a casual smoker. When you get a bad trade, he'd be out there. I need a dart. He'd go out there and smoke a cigarette and make him feel better. And he'd come back 10 minutes later and he feels a little bit better, a little more relaxed, a little more refreshed. You know, I don't smoke, so you know I can't go do that. But I don't think it affects me. It's probably just I've been in the game 18 years. When I lose $1,000 or a couple $1,000 on a trade, it doesn't matter that much to me because it's it just goes
with the game.
Yeah, it's just part of it. So I never take losses personally, and it's something that I probably did a lot when I was first started trading. It's hard not to, but I don't think of when I lose $2,000 on something, I don't think of it as like, holy cow, I just lost like all my bills for the month or something. No, I think of it as like, well, I lost maybe a day and a half of trading or whatever, a day of trading, like I lost yesterday's profits or something like that. You got to consider it. It's going to come with the game. You're trading, and you're going to have losses. And once you're able to digest those losses, once you're able to come and cope to it and say, okay, I'm going to learn from my mistake and move on, then you'll become a better trader. And that takes time. If you're new, it's going to, I can remember my first few losses and they really hurt. And you're like, oh, and you're trying to figure out what you did wrong, but you're still learning. So, the best losses are all those first losses because you get to learn so much from them. Now I get like a $2,000 loss and it's just stupidity. I didn't realize that I reported, but 289 stocks, I'm going to cut myself a little bit of slack. I missed one, but, and it cost me. But anyways, you just got to, get to a point where you can shrug it off.
You started out with 18 straight losses, right? When you were in the Bright office, or was it 17?
No, yeah, I think I set the record in the Bright trading office. So my first week, let's take us all the way back to May of 1999. We got a couple minutes, don't we, Spencer? Let's take us all the way back to May of 1999 when I started under Joel Alcon at Bright Trading in Detroit. And, I remember my first day and I made like $25 on my first day or something like that because I was trading real small size. And the next day I made like $150. My whole first week, I was green. I was like, I can do this. I'm green. The next week came. And man, the Monday came, I lost like on 18 or 19 trades in a row. I was like, how do you do that? I mean, it's like 50-50. How do you actually lose on 18 trades in a row? Next day, I lost money too. I was like, I lost all week. I was like, man, I actually don't know what I'm doing, but I kept learning, and you slowly learn from your mistakes. And over the course of the next few months, my account drifted down a little bit, but then it started to come back up. And then after 6 months or 7 months or so, I started to get a feel for it, and I started to build some consistency. And since then, since the year 2000, and people won't believe this, but I've got stats to back it up. I have not had a losing month in my day trading account since the year 2000. I have not had a losing month in 17 years. Wow. And that's the truth. And that's my day trading account. Investing account is completely different. That's going to move with the market. But, I went through financial crisis. That's where I've made the most money. So I have not had a losing month in 17 years. And
after you had like 6 months of winnings trading 100 shares, I finally convinced you to go to 200 shares. Remember?
I know. I was trading too light.
All right.
I was trading too light back then. I had to add more size. It took that. I probably still trade too light. I'm risk adverse. And so, people think you're a risky guy because you're a day trader. I'm risk adverse. I'm always looking to cut those losers as soon as I can. I cut the square loser too early, obviously, last night. It would have been a good one. I probably would have been a lot better trader if I could have employed more risk. But, I've done well for myself. I can pay my bills by trading, and I'm doing, I think, one of the best jobs in the world. So I'll continue to do it.
All right. We went a few minutes over.
That's okay. But I want to make sure that we ask our guest tomorrow about this. That's Todd Gordon. His site is tradinganalysis.com. He's a founder of that site. He's also a CNBC contributor. I want to make sure we ask Todd about this tomorrow. So we'll make sure to do that. We didn't cover nearly as many earnings as I thought we would, but that's okay because we had some great discussions. So hope you enjoyed the show today. Hope you join us again tomorrow for our final show of the week. Have a good day, folks. We'll be back with you on Friday.